Quick disclaimer, Master of the Markets and myself, ASX Trader, is a corporate authorised representative of ShareX Australia. This information provided is for general educational purposes only and does not constitute financial advice. A little bit about me, I've got a Bachelor of Education. I'm a certified financial technician through the International Federation of Technical Analysis and a certified level 1 Elliotician. All right, let's get into the charts. This video is sponsored by Moomoo. And before we kick off, guys, I just want to announce that we are doing Sydney Live inside the markets later on this year. If you come to our major website, you can click here, the register now button, and it will take you in for all of the details around what it is that you're after. Okay, so come in here, there's a little video around our last one, GC Live, all the things that you'll get. The speakers, myself, Craig, and infamous Tongue as well. He's going to be talking about all of his macroeconomics there. You could listen to him all day. And if you want to look at some photos of what we had at the last one, so you had a beautiful turnout at the last group and really interactive, lots of learning and lots of applying of the charts, help, etc. and things like that as well. And then the best part was afterwards, a few drinks, you get to mingle with your group, your peers for the day and just chit chat around all the things you learned that day or just whatever you want, just with like-minded people. So this event's a little bit different in the fact that it is actually a fully catered event this time. And then you will have the networking for afterwards as well. So evening networking drinks. But yeah, this time it is all day catering for morning tea, lunch, afternoon tax. So if that's something you're interested, guys, hop into the website. I'll put the link in the description and you can check it out. I will chuck up the QR code now. So if you got your phone and you want to QR code that, scan it, whatever you need to do, and you can book it in there. VIP tickets are limited, guys. They did sell out pretty quickly last time. So if you're into that for a networking dinner with the educators, etc. as well, make sure you jump on that. And then all the other ones there should be a really good day. All right, let's get into the charts, guys. All right, I'm going to start with NVX because this is a trade that was a winning trade, but not the winning trade I was hoping it was going to be. And this is where it's important to have rules and know, okay, I'll stay in while we're here, but the minute we go here, I'm out. Okay, so looking at it, you can see old support is still resistance on the weekly. Okay, what I was looking for was that we came up and we held, we gapped down, and I was okay while we were here. And then the other day it started to come down and say, oh, you know what? I've missed it now. If it gap fills and comes back, I'll let it. But the minute we go through, I'm out. And the reason why is because that's the zag zone there. If the buyers aren't stepping in at the 618 on the gap fill, they're not coming in. Especially then when you zoom out, look at the weekly and go, it's rejected. So, as you guys know, I got in at 40.5 cents. So, I was out once we got below there at 40. So it was still a 15%, win. So it was a win, but, not the win it could have been if I'd sold up top. But again, if you sell every time you see a little bit of weakness, you're never going to hold anything onto a big win. And it's always about just having rules. This one, I wasn't short-term trading. I was swing trading it. But the swing never ended up playing out. So here, higher high, higher low, higher high. And I was wanting it to do another higher low and keep going. But now that we've come down here, kind of my reasons to be in are no longer valid. So I'm out. Another really good example is PLS. So PLS was one that I have got it in the swing trade account as well, but I actually took my profits here at $1.94. And this was a really good one talking about actually, I'll show you. So you don't know I'm just making stuff up. I'll show you what I did. So we'll go to Academy. Where is it? Events. Past. And we want weekly trade. So that's July 30. So it was last week. Sunday. Here. All right. So July 23rd is when I took the sell. So you can see here, 23rd, the top. So that candle right there is what I sold into. This one here. And I'll show you how it works. So come down here, get my video. And I'll just fast forward to where we are. Okay, I've got it here. So I want to show you guys this because it's probably the biggest reason why people don't succeed in trading. So I want to show you how I knew to take profit there, my psychology around it, things like that, okay?
Beautiful, beautiful. All right. So today, what I want to talk about is psychology, taking profits, and yeah, just pretty much trade plans, etc., things like that. All right. And one of them I'm going to talk about right now is, and I'll pull it up and show you, is today I took profits on PLS. So this is the chat with the educators, and I just talked about took profits on PLS trading account. We'll explain at 12 why. So that's what I'm going to do today. Okay, so I've got this in multiple accounts. I've got it in my super, my swing, and this is my trading account. Okay, so in this trading account, I wasn't able to get as much as because you know how I say you can put up to 20% of my account. It wasn't able to put that. I was only actually risking 0.5% of my account on this trade. And it wasn't because I didn't want to do more. It was literally because there was no more funds in the account to add a bigger position. So, you know, normally, like I say, I like to risk $1,000 per trade. This one I was only risking 500. So it's coming up to about a 13-to-1 trade. Okay, if it was 1,000, it would be nearly a 7-to-1 trade as well if I was just going off that. But first of all, I just want to talk about why I took profits on it, because you probably noticed and everyone's starting to talk about it. It's, you know, that kind of thing. And this is where you've got to realize what was your purpose of entering the trade. And where most people go wrong is that they try and get the perfect trade. Okay, what they try and do is milk the cow for every last drop they can get, and they get greedy, and then they just never take profits. Okay, or they have the profits turn into losses, and that's where you've got to think about, okay, what's the purpose? So the purpose of this trading account is making money over, you shouldn't be holding something for more than a month. Okay, so somewhere within a week to 2 weeks is your ideal, like less than a week's ideal. Around that 2 to 3 weeks is okay. When you start getting into that 4th week, that's when I really start looking at going, okay, why haven't I made money in the last 3 weeks? I'm supposed to be making money in this one. Is the trade still way too good to not let go, or should I just sell it and put the money elsewhere? Okay, so PLS, as you guys know, I went in, whatever it was. Actually, let's have a look. I can't remember what it was. So PLS. So we were back here, 24th of June. So this one, you know, I've had for pretty much a month on today. Okay, so 4 weeks. So from there, I'm up from that 124 up to the 190. If you guys can remember, when I took the entry, there was a price target I said I was aiming for, and that was around the $1.95 to $2 mark. Okay, so this is the great thing about trading is if you put in the effort early and you already then go, okay, this is my zone where I want to take profit, and I'll explain why that was my zone in a moment. When you get there, you're selling on data and you're not holding because of greed and emotions and this and that. Okay. I also don't care whether or not this goes and keeps going up. In fact, I would have loved that because I have it in my super and my long term as well. The swing trading account is all around writing the market structure. Okay. So I got in because of the change of market structure. Okay. As you guys know, I pinpointed the entry, but once it got above there, it's allowed to stay in my swing account. What that means is even if it rejects here, I've got to give it room to come back and zag and still be doing what it could, you know, it could do that, and it's still completely all valid, and there's no reason to get out of it as long as the market structure is in an uptrend. Okay, so again, it comes back to what was it I was trying to achieve, and for me, that's my short-term trading account. It's trying to make money over a short period. I got my entry, I got my exit, I got my 13-to-1 trade. Okay, that is a big win, phenomenal result. That means I was risking 1%. I was risking 0.5% of my account to make 6.5% or 6.8%, or a 13-to-1 trade. Okay, you've got to be okay with that. You've got to be okay with taking the win and not caring what it does after that. because at the end of the day, that's what you're trying to do. You're just trying to make money. And unless you ever realize something, you'll never ever realize the profit. Okay. I now, by selling that, like I was up that nearly $7,000, but I wasn't actually up anything because I hadn't actually sold. Now that I've sold, I've now locked in a 7% account growth. Okay, so you've always got to remember what's the purpose of that account. Are you short-term trading? Are you long-term trading? Because what happens is you can say I'm in this for a short term, but then what happens? Everyone starts talking, maybe I'll hold, maybe I'll keep going. And then you end up, it does something like this and it comes back and you start giving back a lot more gains. Okay, so what you've also got to remember is that trading account is all about just looking for opportunity. Like I said in the weekly outlook, there's a lot of opportunity right now. My trading account's maxed out. So for this to hit my account, and I'm seeing chances of weakness now, because my rules are that it will stay in my account as long as I can't build up a position to say that I could short it here. Okay, and I always, every time I look at it in my account, I've got my balance scales and I've got a bull over here and I've got a bear over here. And when I entered here, I had a massive bullish case. So multiple reasons why I was bullish, and I could only see one or two reasons why it was bearish. That kept at the whole way. Now that we've got to this point here, I can actually start to build a bit more of a bear case as to why I could short it here. Okay, and that's where then you got to go, okay, well, from this point forward, I've actually kind of got a 50-50 chance, and I'm not just risking 1% now. Now, if this was to do that and pull back like that, that's actually about 4% account growth I'm giving up by letting it, sorry, not 4% account growth, because of it'd be that 2 or 3% account growth. So then I'm actually kind of risking 3 trades on this pulling back, that kind of thing. So that's the mindset you've got to have when you're looking at these things. Okay. So for this one here, I just want to talk about why I was taking profit here. All right. So remember last time we brought this all the way back to that last change of market structure, which was here. Okay. So from that point, we were looking at the zag zone, which you can see we've run right into that 618 right now. Okay. So that was one reason. The other reason was the decline resistance coming down around this way. So we're like, okay, we're getting close to the next decline resistance. And the other reason was, remember, the fib extension. Excuse me. Okay, so this was the area where I was like, you know what? I'm going to have to be careful around here because this is where sellers will start to kind of step up, etc. Do I believe this is a major top? No. Which is why I'm still holding my swing account. I still have in my super, and I've still got those entries and I'm not touching them. But they are designed to hold longer. They're designed to, if you can't handle the zags, you don't deserve the zigs. If you can't handle the zags, you don't deserve. That's what they're designed for. The trading account is not designed for that. The trading account is not designed to hold a pullback from there to there. Because then if you look at that, that's the 20th of August. That's now another month that I've had dead money in my trading account. Okay, the trading account is all about getting your breakouts, setting targets, and you sell into strength at your target zone on a 3-to-1 trade. Okay, so this is what you've got to have. It depends what it is you're trying to do. One of the hardest things in trading is having different mindsets for different accounts or different trading styles, etc. Okay, because swing account, yeah, you're holding until the market structure changes. Trading account is not about that. Trading account is all about an entry with a good risk to reward, and you have to take profit as to where you can build up a case for thing. So can you see how I can already start to build up a bit of a case as to why it's there? And then on top of that, we've now started to hit our overbought territory. On top of that, on the hourly, we've gapped. Sorry, let me get out of this. Let me get rid of this dot now. Okay, we've gapped up, which you probably see it better on the 15-minute. Okay, so we've gapped up today into then a shooting star into like an evening star reversal. So it's like, well, hang on, why did it gap up into weakness as well?
So hopefully you can kind of see what I was talking about with that now. Okay. So, sometimes it's really hard with psychology to know and to stick to your plan, all those kind of things. But you've always got to treat it as in, would I buy this today? Because remember, markets move on supply and demand, which is buyers and sellers. So just because people would buy it here doesn't mean they're going to buy it here. So there's obviously more sellers that would step up here than buyers. And that's the mindset you've always got to have, which is why I talked about that weighing machine. So that's what that weekly trades and the Wednesday session's all about. It's like getting inside a trader's head so they can actually see my thought process, see why I got into things, see why I got out of things, and talk about it in real time. So that way they can actually see this, not only the trade and the trade plan, but the psychology around that trade plan as well. Because as we all know, that is actually the most difficult part. Okay, so if you look at that now, I was in a 123.5, whatever it was. I was up 60%. Or whatever it was, 55%, I think it said in the thing. And, and up that 78. From there, if I was to still be in it now, I'm only up 30%. So I would have given up about $3,000, which is about 3% of that account growth in that trading account, which means that's like losing 3 trades in a row, not just one. Because when I lose one, I lose $1,000. You know what I mean? So that's what you've always got to think about it, because every day you are holding something or essentially buying it today. So then that means, well, hang on, if it pulls back, that's actually 3 trades I'm getting wrong, because that's actually money that I haven't profited yet, because you haven't actually made money until you sell. Okay. So all these big green days you're getting, until you actually hit sell, they're not green days. So I just wanted to show you that, because I thought it was a good lesson to kind of show, because it's something I used to be so bad at. I'd get in, I'd get perfect entries, I'd be up green, and then all of a sudden I'm in the red. And I'm like, what's going on? And it's because I never put effort into the take profit. Okay. And it's crazy. You should put more effort into the take profit, because you've got money on the line then. But for whatever reason, that's not how we work. We put more into the actual risk. All right. Let's look at some other ones. So CNI has finally broken out and looking really nice. So this is one that's in my swing account, and I initially bought it and posted about it. Actually, let me check. I can't remember now. Yeah, here it is. So it was June 5th, and it was when we had this bull flag breakout. Okay. So I was like, we're breaking out this channel, we're up, bull flag, everything's looking good, volume's looking all fantastic as well. Okay, so here. Had the stop below here. So as you can see, it hasn't hit. So from there, higher, 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 higher. We're looking good. So we have broken out here, which is nice. Broken the key resistance. Everything's looking fantastic. This is reset, room for upside. Volume's looking fantastic. So now with this one, it's all around then looking at the bigger picture, which is if you zoom out. So let's look at the big picture. And what we've done is we've had our wave 1, wave 2, wave 3, wave 4, wave 5, and you'll have divergence from the 3rd to the 5th there, I bet. Yep. Okay, so bearish divergence from the public persuasion to the excess. You then get a big correction. So from there, trace from there to there, up. And you can see we came down into the zag zone. And can you see how it's perfectly been buying off the fib 382? Except for that. Then you've got to wonder, well, why does that exist? What's the purpose of that? Why were we buying here, then not, and then now we're buying here, buying here, buying here? Okay, this is a perfect accumulation pattern. This is what's called the liquidity bottom, the spring, whatever you want to call it. So to me, this is a fantastic accumulation that's happening off the zag zone after the massive move up. Okay, so what this should mean is that this is about to enter a new bull market once we get above this $2.12. Okay, so once we get above there, that's looking good, and we can actually start to project out our trend based. And I would be looking at that 1.618 as your first kind of level, that you might get that, move up to there before something like that, and then up. So, as a shorter term target, you might look around that 330. But personally, I'm going to just be riding the swings, because I'm actually trading this one on the weekly, which is I'm just going to ride the change of market structure. So unless this literally falls off a cliff tomorrow, which I doubt it, as long as it closes above $1.81, you've got a beautiful change of market structure and a continuation of the trend there. Okay. The only way you could get screwed is if it goes A, B, C like that and keeps going. So yeah, just see whether or not that comes in tomorrow, but looking really nice there on the CNI. Another one I'm hawking massively right now is DMP. So same thing. If we look at the big picture, after, again, 1, 2, 3, 4, 5 up, I'll move down. We're bouncing off the Fib 500 right now. And as you can see, this monthly candle actually closed today, because tomorrow's the 1st of August, right on this Fib 500. So if this turns into a green candle tomorrow, that will be a Morningstar reversal. So that's what I'm betting on and what I think it's going to be, and I'll show you why. So if we go into the hourly, let me just get rid of all this now. This was some horrific news that came down, and it's been bought up straight away on really good increase in volume. Like, look at this, fantastic volume. So if this is so horrific, this starts to get up above here, you've got to go, the market had priced it in, and it wasn't as bad as what they believe it was. This here is a leading diagonal, which is the beginning of a move. So big wave 1, 2, 3, 4, 5, and then a nice long drawn out wave 2 that's going up on increase in volume. So I'm not in it yet, but if we get above this kind of $19 zone, I will have no problems taking a trade with a stop below. Because then once it starts taking this out, then that's that whole terrible bad event that the market has now written off. Why? This is what's called divergence in a chart to fundamental news. Okay, because you know how the markets are forward looking. The market had already known it was going to be bad. It overreacted to the move, and then once they've actually crunched the numbers, gone, actually fundamentally this is cheap in a buy right now, and that's why it comes up. All right, so keep an eye on that $19 mark there. That happens. Domino's Pizza is looking very nice and up from there. So yeah, that will be your change of market structure there, but you've got to get it through that $19. Okay. So another one, keep an eye on there. SGQ. Everyone started panicking about this one when it did the capital raise. What was great about this one and what I posted about was that they did the capital raise at 3.8, which was at market price. So, put it this way, if you're a company, someone comes knocking on your door and goes, hey, I want to give you $5 million and we're not going to, buy it at a cheaper rate or anything like that, you're going to say yes. No company's going to say no to that, because all that's giving them more money on their balance sheet. Without, they're diluting the shares a little bit, but at a premium rate, you'll take that every day of the week, because these small caps, they have to capital raise eventually, because they're so capital intensive, always having to get the mines off the ground, etc. But still looking really good. It's come down. It's looking like a really nice double bottom. Really good volume still, but to me, that was a move of strength. That means that someone in the know wanted in, because they were coming in and going, but they can't buy $5 million on market, because you'd wake up one day with a candle this big. So the great thing now is it should not fall back below. So depending on how you're trading it, it should not fall back below this 3.4. Okay, because they did that there at 3.8, which is right at that resistance. So we don't want to see it come back down below here. Okay. It can and still be bullish, because the zag zone is here at 3.4 to 2.9. So, 3.4, you'd really want to see those buys coming off that Fib 382 there. But it could come down to 2.9 and that resistance flip to support again, maybe, but I highly doubt it. But just so you know, that would still be bullish even there, because that's just zigzag, and it's still technically okay. Oil is another one that no one's really watching, and it's still looking pretty good. So as you can see here, it's still holding this major support here. And now holding it. Watch this. So if we can get up here and get up above that level, oil will start to look really good. If you look at a couple of them like Woodside, etc., it's starting to now change, put in a non-failure swing. So reversal pattern. So we bounced off that level that we called the bottom on energy a while back. And depending on how tomorrow closes, it could put in it, or otherwise you might get like a W. Look for something like that, you know, like a double bottom like that. But yeah, that'll be a non-failure swing coming off that low there, which is looking quite nice on really good volume. So these oil plays, you know, they were manipulated on the short-term nose. That Trump stuff actually ended up being a top. It pulled back. The buyers came back in here, which is fantastic. And oil is still looking good. So, you know, I'd still be looking at oil plays for a good long-term swing position here as well. That's all I was going to share for today, guys. I've told the guys on Sunday night just to be careful this week. There's probably going to be a bit of red. I probably had one of my worst days that I've had in a little while, but I was prepared for it and I knew it was coming. So it's all about, if you can't handle the zags, don't deserve the zigs. This is what you need to have in the swing accounts, because as we know, this is how markets move. They zig, zag, zig, zag. So I guess the one probably people are wanting to know about is silver, which is, if you look at the big picture, so the 3 monthly, let me just move this over. It's dead at a major resistance, like a 40-year resistance. And we're here right now. So it would be kind of crazy for no sellers to come in first time it got there. It would be crazy for it to just keep going through. Okay, this is a 40-year resistance. So if you now zoom into that, go into the daily, you can also see coming into that, you've had 5-wave move coming into it. Okay, on bearish divergence. So it's normal, healthy to get a retracement. You know, maybe a bounce off here, another thing, and then a move down to here, and then a low, maybe late August or something like that. Just come back, test resistance as support. Maybe it doesn't get that low. Maybe it only comes down to this 35. You know, it's common for it to come down and the way for it again right off that excess phase. Okay, but it would be completely normal for it to even do something like this and chill here for a bit, consolidate before ready to go. Because when it breaks that level, guys, it's going to absolutely rock it. I'm not short-term trading silver. As you guys know, I'm long-term. You know, this here was down thousands and thousands and thousands of dollars because of that. Didn't even flinch. Didn't even flinch, because long-term account is looking at the 3 monthly chart. And tell me what is bearish about that. That's the biggest cup and handle in modern financial history that is looking extremely bullish, and we're just at resistance, which you'd expect a bit of sell pressure here. All right, so you've got to, again, back to what I said at the beginning of the video, what's your time horizon, what's your plan? Because if this is the thing, people will say I'm holding it long term and then freak out because one day it's black, or I should say red. I've got black candles. All right, so again, time frame, what's your plan? If you're short-term trading, you're at resistance. Why would you hold at resistance if you're short-term trading? Okay, and especially if you also look at the silver miners as well, they're also at resistance, which is what I talked about with MTM students. Sellers. So you're probably, again, going to get sellers and get a bit of a pullback here. All right, so, but again, what's your time horizon? I entered silver here because I was long-term. So if I can't handle the pullback, I don't deserve the zigs. I don't deserve this, and I don't deserve what's to come if I can't handle a little bit of a pullback at a resistance that's supposed to happen. Alrighty, so I just wanted to end with that. I thought that was a good ending to what I showed you at the beginning, because only you know what your time horizon is, what it is you're trying to achieve. All right. If you like the video, guys, please like and subscribe. I'll add the links to the Sydney Live in the description, so you can add that one, or you have the QR code if you want to go as well. All right, guys, take care, and I will catch you on the next one.